And now it's time for Development Debates, where we dig deeper into some of the questions shaping the future and present of China. Today we will see two Chinese experts debate if the Shanghai-Hong Kong Stock Connect project will benefit China's economy and investors. China's government has announced plans to keep opening Chinese markets to the world. The Shanghai-Hong Kong Stock Connect project is one example. This project was launched in April of this year. This project is believed to mutually benefit both Hong Kong and mainland China's capital market. The so-called Shanghai-Hong Kong Stock Connect project allows investors in the two areas to buy shares in each other's stock exchange. The total purchase quota between the two stock markets is 550 billion yuan, or about 90 billion US dollars. Market insiders believe this project can broaden the investment channels available to individuals. It could also strengthen the status of both Shanghai and Hong Kong as financial centers in Asia, at the same time hopefully improving internationalization of the renminbi. Shen Jianguang is the chief economist at Mizuho Securities Asia. He believes the Connect project will benefit China's economy. Shen wrote on his blog that the Chinese government shows strong enthusiasm towards making the renminbi more international. But currently the country's exchange rates are still controlled by Chinese central banks. This has become a major obstacle for internationalization of the renminbi. The government hopes the Shanghai-Hong Kong Stock Connect plan can accelerate a change and eventually help renminbi exchange rates to be market-oriented. Apart from this, Shen believes the Connect plan will attract more foreign investment to come to China. He refers to the recent rapid stock increase in Shanghai's stock exchange as an example. From July to the end of August this year, Shanghai's stock market index has increased 8.7%. That's far more than the growth rate of any other stock exchange market in the world. During the same time period, the Dow Jones Industrial Average only increased by 0.5%. Shen also says that most of the capital comes from foreign investment. He claims that the country's currently slowed economic growth has forced Chinese banks to reduce bank loans to Chinese companies. To get loans, these companies must pay higher interest rates than before. Shen believes that the capital influx from foreign investors can help lower Chinese banks' interest rates. This would reduce costs for Chinese companies and eventually benefit the country's overall economy. However, financial commentator Guo Shiliang disagrees. He is not optimistic about the project. Guo admits the Shanghai-Hong Kong Stock Connect project can mutually benefit the two stock markets and the country's economy. But the project also might present potential risks to mainland investors. Guo says the Shanghai Stock Exchange only allows shareholders to sell their stocks the next working day after they purchase them. However, investors in the Hong Kong stock market can purchase and sell shares in the same working day. Guo thinks the different systems allow for different benefits. Investors who buy Hong Kong stocks in the Shanghai Stock Exchange must take one more day of risk if any emergency happens in a Hong Kong-based company. This is because they cannot sell said stocks the same day. Apart from that, Guo mentions that the trading time for the Shanghai Exchange ends at 3 p.m. This is an hour earlier than the Hong Kong Stock Exchange. In one scenario, mainland Chinese companies could announce news after 3 p.m. that benefits stock prices, causing them to rise. In turn, Hong Kong investors still have time to purchase stocks and make a profit, while mainland investors would have to wait until the next day. In this way, most profits could potentially be absorbed by Hong Kong investors. It seems that the Shanghai-Hong Kong Stock Connect project could help improve the country's economy, but the different systems between the two stock markets might decrease benefits for mainland Chinese investors, respectively. Perhaps the next step is how to reform the Shanghai Stock Exchange mechanism to make it more suitable for the project.